You have an idea and you started to work on that idea with the right. Those times have gone. Now today, if you look at how investors are evaluating an idea, they're doing it on first principles basis. They're doing it sharply, deeply. It's always a problem first. Specifically because you need to know what you are solving for and then solve for it, right? When you're building an idea, it should solve a problem. When you speak about losses in startups, it's become more of a fashion statement that I am burning XYZ money, I'm burning this much, I'm burning that much. It shouldn't be that way. I'm an investor myself, that investors are more concerned about profits than anyone else. Because they want to, investors love profits. The revenues will not come by you buying a product. The revenues will come by someone else buying your product. And when someone else is buying your product, you need to think through how that person is thinking before buying your product. So thinking like a consumer is important. In fact, I also extend this that think like an investor.
What excites you the most? Which industry?
Oh, it's a tough one. But I'm actually bullish about a couple of sectors in India. And one is ice cream as a space because I feel that.
Welcome to ENTERpreneu. Today's podcast is very special. It's all about startups, investments, and their reality. In today's podcast, we are joined by someone who himself is an investor and entrepreneur by profession, but an educator by passion. He is a rank-holding CA and the gold medalist of ISB Mohali. Not just that, he is also the co-founder of skillson.io and has recently founded his own financial investment firm, Himlands Capital Private Limited. He is the ex-VP of investments at 6 Sense Ventures. With this, let's start the podcast with the man himself, Siddhant Gupta.
Hi, we have the big investor, the big man, the startup guru Siddhant Gupta with us. He's a CA and multiple more things which you might have already known in the introduction. So, before we start, can you take us through the early days of your life, wherever you want to start us with, and introduce something about yourself?
Right. So firstly, thanks Shan for having me on ENTERpreneu. It feels nice to come on this show. And yes, it's been a good journey for me until now, I would say, and looking forward to the years ahead. In terms of my early days, so I grew up in Mumbai. I did my schooling in Mumbai, college and everything, all my studies and my entire early life was out of Mumbai. The only time I stepped out was when I did my MBA from the Indian School of Business in Mohali, where I was fortunate to graduate with the gold medal. I also completed my chartered accountancy in 2017. And since then, it's been a roller coaster ride. I have worked across a couple of roles, starting with one at Deloitte, where I looked at the financial modeling requirements of all our partner companies across the globe. From there on, I moved on to taking up a role as one of the management consultants in the world's oldest management consulting company, that is Arthur D. Little. This was right after my MBA. And the bulk of my work experience has been as the Vice President of Investments at 6 Sense Ventures, which is India's largest domestic consumer-focused venture capital firm. So where we were managing about $500 million in assets, and I personally was managing about $75 million worth of assets, worth of investments, and led a couple of investments across Series A and B. So some of the notable ones, for example, were Procmart and Parag Milk Foods, the Go Cheese brand that you would have heard of. So that's been a bit about me. Last year, I started my own, I started two ventures. One is on the lines of my passion, that is called Skillson, which is around teaching young professionals and students courses and topics that are not actively taught in schools and colleges, like how do we evaluate startups and companies in the venture capital space. So I've developed a course called Venture Capital Mastery. I've developed a course on financial modeling and a deep dive on different sectors. And I've started an investment banking firm called Himlands Capital Advisors, where we look at advising young and growing companies with their fundraising requirements. So we also completed a recent deal that will be announced soon, and running 2 mandates in the apparel and gifting space. So yes, multiple things going on right from my early days to now.
Great to know that. And
Thanks, Chan.
let's start with the fundamental. What is a startup? Because in this country or in the world, people have a very different assumption of what startup is. If I be bluntly honest, people are even in a delusion. It is not like that. So what is a startup for you?
See, for me, a startup is an idea on which work has started, right? If I were to put it in very simple words, an idea on which work has started, right? That is startup. Because if you think of, let's say an apparel company, right? They've come up with a different type of an apparel. Let's say I'm advising a company which is working in apparels for the obese people in the country. Now that is not which every brand works after. So they've got an idea that they want to cater to those. Now, in order to build on that, they will start working towards it. They will do the entire market study. They will feel that, okay, this is the opportunity. These are the type of garments I should make. This is how I should make the products. This is the factory. I will contract the product to some subcontractors, get the product ready, and then sell it in the market. Now, all of this requires team. All of this requires thought, and all of this requires money. How do you get all these resources to work together on an idea that you started with? So you have an idea and you started to work on that idea with the right resources, be it in terms of talent, be it in terms of capital, be it in terms of infrastructure. And that to me is a startup, right? And that opens up opportunities. That opens up opportunities for people to work in, because you can be the resource that is helping make that idea work. So in simple terms, an idea on which work has started.
I've discussed with you earlier, but let's put this to the world now. Problem first, solution first. This is the thing in a startup world, in the corporate world, where people say all the startups fail is because they're solution first. So what is problem first, what is solution first for you?
So I personally feel that it's always a problem first, specifically because you need to know what you are solving for and then solve for it. Right, but this could change from context to context, but the very fact does not change that when you're building an idea, it should solve a problem, right? So when I say it could change from context to context, probably you can say that, hey, what if people did that, right? And then work backwards to arrive at a problem. Well, that might be true maybe in some exceptional situations here and there. Largely, you should always know, okay, this is the pain point. These are the things which people are not liking. These are some aspects of life where people want to better. And I want to solve for it. And I want to solve for it in a big way, a way that can be scalable and get me the desired results. So, according to me, it is problem first, followed by a solution that can scale.
Now let's come to the dark reality. Loss in startups. Big
Right.
thing.
Yes.
So even before I ask any question, what's this thing that you can break to the world? What is the loss delusion going on, and what actually loss is in the startup world?
Yeah, it's a little disappointing, honestly, Ishan, right? Because when you speak about losses in startups, it's become more of a fashion statement that I am burning XYZ money, I'm burning this much, I'm burning that much. It shouldn't be that way. If you're spending 1 rupee and you're earning, let's say spending 10 rupees and earning 5, it is not a matter of pride. And it is not a matter of fashion statement that's saying that I'm burning 5 rupees. I personally believe, and this is also validated by all the businesses out there, that the dhanda mindset is a mindset that should govern all the businesses, be it traditional or modern. That every rupee I earn, against that, every rupee that I earn in revenue, against that I need to save something, whether it is 10 paisa, 20 paisa, whatever it is. I cannot spend more than I earn. And that dhanda mindset should be deeply rooted in every philosophy for every startup, right? Loss in startups is unacceptable. So the thought process here is that, hey, I will market. It's okay if I'm making a loss because investors are there to give me money, and I will reach a point where customers only want my product, and that's when I will milk them and get profits out of them. It doesn't work that way, because by the time you reach that point where you've exhausted all your funds and you feel that now I can price it higher and get the profits out of the customers have already switched. So where are you? So the idea here is that the profit focus has to be there from day one, and it cannot be a fashion statement that I am burning money, because you just cannot burn money. That is not business. We learned it in our school textbooks. That definition of business is, how do I make and sell a product or service in order to earn a profit? And if that in order to earn a profit is not there, business is not there.
So guys, the first thing, as an investor, is telling loss is unacceptable.
Absolutely.
And I've found a very catchy line in your statement. We'll take investors' money. Is it easy to take investors' money? this mindset कि investor का पैसा मिल जाएगा. Is that possible?
That too is not very easy. So what's happening, Ishan, is that investors have also got, there was a period right during COVID where investors got liberal with the money that they had, and they said that, okay, let's invest in 10 ideas, maybe 3 or 4 out of those ideas or 1 or 2 might work. So that's when they got a little liberal with the money that they were spending, and they were doing a little lesser analysis that they would have done had they got the idea today, right? But then those times have gone. Now today, if you look at how investors are evaluating an idea, they're doing it on first principles basis. They're doing it sharply, deeply. So getting that investor's money is also not very easy. But what I'm trying to say is that, let's say some way you've also been able to get the investor money. Burning is still not an option.
2 things that it takes me to. Let's go with the first thing. Getting investors' money is not easy. They do on the first principle
Right.
thinking and all. If I go jargonish, due diligence.
Right.
That's the simple term.
Right.
For it. What is due diligence? Because people have a perception that investments happen the way it happens in Shark Tank. Shark Tank is just a promise that we'll go with the due diligence.
Correct.
That's what the people say.
Correct.
And it's a two-way thing. It would be wrong to blame the sharks that they are not giving money, because many times external investors go to these people and fund them at a better valuation.
Correct.
So they reject, as what sharks even say. And due diligence is done firstly without the founder being aware of that due diligence has started, because it's the sector thesis that we know. And after sector thesis is the company thesis. So can you clearly tell how does the investment go?
So the investment process is fairly straightforward. All right. I look at a sector. I see the sector looks exciting. I then look at the companies in the sector. I then specify, okay, these are 1 or 2 companies, or the one company that I want to do a deep dive in. I will then screen the company, get deeper into it, and then from there on I will first issue a term sheet to the founder saying that I'm interested in a company on these many terms. Now the term sheet is an illustrative document. It is not binding, but it is a understanding with the founder that I'm now going to get deeper in your company and on these terms. After that, you start getting deeper with the due diligence that you mentioned. So due diligence is that if Ishan is forming a startup and he says that I'm earning 10 crores of revenue, is Ishan really earning 10 crores of revenue? Well, of course, I see that in my initial stage of research. But then when I do the due diligence, I rope in a agency who does a due diligence from a finance perspective, a financial due diligence. I rope in lawyers to get a legal due diligence done. Operational due diligence, generally investors only do it, operational or commercial due diligence. So let's say if I'm doing a financial due diligence, an agency or a company, let's say like a Deloitte would come in and deep dive into every document out there to see that whether you really are earning the 10 crores, whether your statements are really correct or not. And then once you've passed through that phase, you've satisfied us on the legal front, on the financial front and the commercial front, is then we will go on to then finally submit the documents. So you've got a shareholders agreement which will govern my rights as a shareholder. I've got a share purchase agreement where, let's say if I'm purchasing your company shares from an existing investor, that's when I'll sign a share purchase agreement on SPA. Or you have a share subscription agreement where I'm putting money directly into the company. After that is done, the funds are dispersed and then we release it to the press, we announce it to the press, and then we set the MIS format and the entire reporting formality set in.
That's an elaborate process.
Right.
So the second thing where I wanted to come up is, there was one reel that went viral 3 years ago that said investment is not good for your business. Now on Instagram reels, even I make some, but anybody can say anything. What he said was, investors are not bothered about your profit. They are not bothered about anything. They are just bothered about your revenue, because higher the revenue, higher the valuation, better the exit. Is that true?
Absolutely not. So there would be 1 or 2 people who would say these things, and of course people have different views. For every industry, every person, there would be people who say good things about you, good things about me, bad things about you, bad things about me. So there will be people with views about every person, every company in the world. But the truth is, and I say this because I'm an investor myself, that investors are more concerned about profits than anyone else. Because they want to earn money, of course, by building on valuations. And today's world, you don't get valuations on the basis of revenue alone. You need a profitability to get a good valuation, and this is validated by cases across. And you see all the traditional businesses, why are they getting good valuations? Because they have inherently very strong and profitable businesses, right? So the first aspect I want to clear is that investors love profits, and because profits build valuation. The investor definitely love valuations, and they also love profits because profits build valuation, right? That is one. Secondly, investors are very much concerned about the growth of the business, right? Of course, there could be, I mean, as I said, there could be a few bad apples. I would not say bad apples, but there could be few investors who might think differently. But largely, the space I've worked in, I've seen people around, they would want to grow by helping others grow, right? I wouldn't want to grow by just cutting short on a company and saying that you just get revenue at any cost. That's not how it works. So yes, I want to clear this out that as investors, we love profits. Profits build value, and we love to create value by helping a company grow rather than by having a short-lived mindset of just building on the revenue.
One more thing, when you say ki people might have a bad perception about me, about you, whatever, how to handle criticism in your life? Because that's like, it's not just about business. Even in your personal life, you might face criticism for nothing. Somebody might be jealous of you. That's why they might show that I am a well-wisher of you, but they are not.
They are not, yes.
And they are like just trying to do that to pull you down,
right,
so that they can go up. How do you face these things?
So Ishan, that's where you need to develop an art of letting go. Because, and this is true of life in general. Now, I am not a life advisor, but at least from my experience, and I'm not too old either to be giving this experience, but you need to believe in letting go, right? That if people are criticizing you, speaking about you, what you feel will help build your own self in a better way, that you can extract. They say that, hey Siddhant, you're maybe not doing this right, and if you genuinely feel it's not right and you can actually build on it. But there is also a fair bit of criticism that you get, which you feel that, hey, why is this person doing that or speaking this, that, right? So there you'll have to let go, because if you take everything seriously, you'll not be able to do what you really want to do.
Well, that's a wonderful answer. I couldn't have expected a better answer. Let's come back to business. Which startup excites you the most? Which industry?
Oh, it's a tough one. But I'm actually bullish about a couple of sectors in India, and one is ice cream as a space, because I feel that, and I've said this in one of my sessions
to me many times.
Yes, and to you also many times, that India is actually one of the lowest consumers of ice cream in the world, even lower than Pakistan for that matter.
Oh.
Right? And the summers are getting hotter by the year, and the infrastructure is improving in rural areas as well. So the stage is set for a product like an ice cream to grow. And the interesting part is that ice cream is no longer a summer treat. We've seen on an almost equal split between summer and winter consumption of ice creams in India. So I do feel personally that ice cream as a space will definitely pick up. The other two spaces which I feel will pick up would be packaging, because packaging is intrinsic to every product out there. And packaging today is more than a protection element, is also picked up a marketing element. The way you package also helps you drive better sales. Third sector I'm very bullish about is warehousing. In fact, the most bullish about it. I feel that the fundamental block of an e-commerce, quick commerce, or any business is a warehouse. A quick commerce will need dark stores. What is dark stores? It's a warehouse. An e-com business will need a storage space. What is a storage space? A warehouse, right? A grocery store, a kirana store, if it's a big one and you need to stock your product somewhere, you will need a warehouse. Many of them have warehouses attached to their stores as well, right? So I personally feel that warehousing as a sector can also do very well. So warehousing, ice cream, and packaging, I feel these three sectors can do very well.
So it's not just SaaS. It's not just SaaS that you can earn with. He's making it clear. How do you see FMCG as a category?
It's a very broad category, of course, and FMCG, I mean, ice cream, as I mentioned, was
if I take you to snacks,
FMCG product. Snacks, of course, yes, again, cluttered category. So categories like beauty and personal care, snacks, these are inherently cluttered categories. And when I say cluttered, it means there are so many businesses making similar products. So you'll have to figure out your way in terms of how do you stand out.
Difficult to penetrate.
Yes, you'll have to think through a strategy to penetrate.
But if you penetrate, is there, I guess, according to my understanding, there's no looking back. Am I right?
Yes, of course. I mean, if you're penetrating with the right strategy and the right product, there's definitely no looking back. But yes, you need a careful thought to it, because FMCG as a space is very big. Within FMCG, if you're specifically asking snacks, definitely yes. You need to give an active thought in terms of how you are building your idea and what are you solving for, and how will you stand out from the crowd that is out there. And when I say crowd, from the many brands that are out there.
Can we address something to the parents with you?
Sure. Anything specifically you would like me to speak about?
I am 18-year-old. I have gone through, like, first I was an hardcore IIT aspirant who wanted to get in science, but I found science is not my interest. I like science, but I don't like studying science as a studies. I love business. You know how much I love business. That's why I'm here at Mesa. I want to be a big time angel investor. I want to be an angel investor more than an entrepreneur. So business and startups and all these kind of courses was good for me. First mindset is कि students should take science. And उसके बाद you are a CA. When I took commerce, the world was behind me. CA कर ले, CA कर ले. I was like, no, I don't want to do CA. I want to get into the marketing, investment, and all those kind of things. And entrepreneurship course is probably the best one for that. So, you yourself being a CA, you can tell this to the world, and the science thing that the world has, the parents are always behind with.
Right. So I can, I'm not in a position to advise parents because they are much more accomplished and experienced than me. But what I can say is that I took up commerce because I wanted to take up commerce. And of course, I also grew up fairly in a space where in my batch of 120 students at Bombay Scottish, where I did my 10th out of, there were about almost, 110 people who had taken science, and barely a few of us had taken commerce. And so it's not that I took commerce in a space where everyone was taking commerce, but I chose the path because number one, a lot of people in my family were chartered accountants, and the surroundings typically gave me an idea. And what I've realized over the years is that at the end of the day, if you pick up a stream against your will or excitement, it does more harm than good down the line. So my only advice is that pick up a stream that students would generally love or have a liking towards, and at the same time be practical. So let's say if someone comes and tells me, I'm not a parent yet, but let's say if my 2B child would come and tell me that I want to become a cricketer or a singer, I would have an apprehension because I know the scope. Right, only 11 people make it in a country of 1.3 billion people, right? So I know the scope. So at the same time, being practical. So careers like commerce, arts, all of them have now several different careers within them, and many of them are doing well. So it's important to take a practical view around what you want to do. But definitely true that science is not the only way to go forward, and especially if you take up science against your will, absolutely not.
Jargons, biggest problem. People think if they know jargons, they're
Right.
successful. CAC, SAM, SOM, TAM. 4 of the most commonly used jargons in startup world. FMF, BMF, PMF. How many times do you use these words in a day? And do you feel, are these the only things to get successful, or you can even get successful without jargons?
So I'll tell this to you, Ishan, I don't use them even once during my day. None of these words. I mean, it also took me time to think through and recollect the full forms of what you were speaking about. So when I look at market sizing, I take a first principles approach that I'm looking at starting a product in this space. Who would be the consumers? How would I look at sizing the market? SAM, TAM, SOM, all of these are okay, but these are good to have on paper. Essentially what I look at is what is my market size, right? This is my market size. This is the market size I can potentially tap, the universe. And then within that, how much should I target now? How much should I target in the next year? Basically doing the same thing what SAM, TAM, SAM and SOM does, but just from a first principle standpoint without getting into the jargons. So let's say I would do the same thing and I would have done TAM, SAM and SOM without knowing that I've done TAM, SAM and SOM. Right? That's one. Secondly, what do I do to win over the customer? That is CAC. But I can think through that without knowing CAC. Right? So essentially, you can think through businesses on first principles terms without really getting into the nitty-gritties of the jargons. Having said that, I'm not saying that you shouldn't know jargons or you shouldn't read about them. Of course, it's good to know, but it is not that knowing jargons alone gets you the credibility that you need.
That's a wonderful understanding. Now, one more important thing, trading, big thing in India. Do you think trading without knowledge is right? Without the knowledge of financial statements, how should you invest in your stocks to minimize your losses?
So let me point out a difference between trading and investment here, Ishan. So trading is I buy and sell frequently. Investment is I buy and hold for several years down the line. Both of them have to be done with an understanding of the companies you're investing in. Now, understanding means that you need to be well read about the company that you're investing in, what the company does, the financials of the company, whether or not you have financial knowledge prior to investing, whether or not you have accounting knowledge. I think more than that, what is important is that whether you've read through the company in which you're investing deeply enough or not. When I say read through it deeply enough, means that you've got the conviction that yes, I've researched the company, I've seen the company, I feel it can do well, and that is when you should invest in a company. What I'm not a very big fan of is that, hey, I felt that, someone just gave me a regular advice, put my money there, and just maybe and hopefully the money will grow. No, when you're investing, do it again from a first principles perspective, having read the company and you being sure that the investment would be a right one. Following some known investors, shadowing them and investing where they are doing, sometimes it's okay. But on a sustainable basis, you need to be well read on the company.
What is first principles? हम इतने टाइम से first principles बात कर रहे हैं. If you could clear that to the audience.
Yes, sure. So first principle means that so what is first principles is that you've got a whiteboard and a lot of it is written. I then take a duster and I clean up whatever is written. I start putting my thoughts on. That is first principles. Because I'm cleaning up the slate, I'm cleaning up my mind with all what I already know and now thinking through it. So when I say I think of a sector from a first principles basis, I get rid of all the noise that I have around the sector, let's say beauty and personal care. And then I now think through, okay, now first principles, who would want to use a sunscreen? Why is the sunscreen used? Right, so I've cleared myself of all the noise and the preconceived notions or thoughts that I have around the sector and then start forming my own opinion. That is what first principles is. First principles.
Thinking as a consumer and then starting a business. How well does that work?
That's how it should be done. Because you're solving a problem which consumers are facing. So you think as a consumer of what would be beneficial for them. See, at the end of the day, you're building a business. The revenues will not come by you buying your product. The revenues will come by someone else buying your product. And when someone else is buying your product, you need to think through how that person is thinking before buying your product. So thinking like a consumer is important. In fact, I also extend this that think like an investor. Because when an investor evaluates a business, the investor evaluates it very critically. So for any founder, it is worthwhile thinking like an investor, thinking like a consumer, and also worthwhile thinking like a investor. When you're buying from vendors, think like a vendor. When you're selling to a customer, think like a customer. When you're raising money, think like an investor. All of these things will help you sharpen your business.
Astrology as a category, booming. Highest, most used app of India, AstroTalk or the astrology platforms.
So I wouldn't give a lot of views on it. I haven't researched deep on this space. But yes, I've definitely seen some interest that's come up now and then. We've got some startups being built out of Mesa campus as well. So that's Hamara Pandit, yes, that's good guys. I've met them. So yes, I mean again, every space will have to be evaluated, and I keep saying first principles again and again. But from the point of view of seeing that who would be the consumers, who would typically look at astrology as a product, and how would it benefit them? Now India is a tale of many countries, a tale of many sub-countries, and to see how the different sub-countries would align to astrology as a product will have to then be seen in the larger context. If that fits in, it can be a good story. Why not?
Marketing. Multiple types of ads seen. I ask this every podcast I do. Some ads are the best ones. You'll always remember it. Some are the worst ones, so you remember and then you're like, "Aisa ad nahi banana." Some are just for hype. And some ads are so emotional, they don't market the product. For example, if I have to market this cover, I won't market this cover. I will touch you on your emotion, and side mein there will be a very small hint of the product.
The product itself, right.
What's your opinion? Which is the best one and how should you do?
See, at the end of the day, marketing, the purpose of marketing is connecting with the consumers and connecting and communicating. Connecting with the consumers and communicating your product or service to the consumers. However you do it, however you achieve the goal. Obviously, in marketing, ad which is not working is not the way to go forward. But whatever is working, you can have an emotional ad, you can have a functional ad, you can have creative ads. Now these are ads that you run. Alongside this, there is a new branch of marketing that's called performance marketing, where you like buy one, get one, I'll give you a scratch card. How do you market an individual product? That is picking up as well, because I also mentioned in one of the classes at Mesa, one of your classes, is that the newer companies don't have the budgets to run advertisements at scale, but they have some limited budgets to run a marketing campaign to market the individual products. Let's say you buy one or you get one, or you buy this, I'll give you a freebie, whatever it is. Now that is picking up, and that's where the market, that's where the competition is also intensifying. So a lot of thought going there as well. There again, there is no answer about what's the right strategy or not. It depends from company to company, product to product, sector to sector. But yes, definitely. And then some ads are really that they stay with you for long, right? And we've seen the impact of these ads as well get to the products. So absolutely. So both are important, but the budgets and the capital allocation is also different for both. So
Not at the cost of your technology.
correct, not at the cost of profitability. So I wouldn't say that, hey, make a wonderful emotional ad and you run a loss. That's not how it should work. Whether you see a HUL running an emotional ad, a Brook Bond ad, that is after, because if they've got crores of profits to be able to do that. So what is important is, again, I say this and again, is that profitability is extremely important. Within the constraints of your profitability, whatever you can do best in performance marketing or overall marketing, the central level marketing, you should be able to do that. You should do that.
BYOA.
BYOA,
It's not
yes.
a spelling mistake.
It's not a spelling
It's
mistake.
not a spelling
Yes,
mistake.
you remember.
I remember we built an ad on this thing, cream, facial cream.
Yes.
So that was comedy and crazy. Coming towards three of the final segments. One question is, when you told again profitability again and again, some people, what they think. We'll build a brand for 10 years, we'll sell it, make money, and have a great exit.
Yeah.
What do you have to say on this statement?
See, it's nothing wrong when you say that I will build a money for 10 years and they'll take an exit and get someone else to run the business, because for 10 years you're invested. But what I would say here is that it's you need to understand the motive behind that statement. Let's say the motive is that, hey, I just want to build a brand, make money and leave, then maybe that comes out to sound a little greedy. Right? But if it is in a way that I genuinely want to build a good business, by 10 years I want to scale it enough that I can get someone else to run it professionally and take an exit, it can be thought of in a good way as well. Right? So there are perspectives to it, how you look at it. And then that's where the way the founder is approaching a business, the way the founder is thinking through a business matters more. That 10 years, how is the person thinking through it? Is it that, hey, I want to make money and leave? Or I want to build a business and then I want to take a backseat, get someone else and then let the business
Shall I
out?
clear it a bit more?
Sure.
10 years, I'm okay to do losses. I'm okay if we don't earn anything. My product,
Okay.
it's just a brand.
No, so that's absolutely
And
wrong. No. So then it's a selfish outcome, right? So then you're building, this is selfish motive. Absolutely not. And I come back to my same point that if this is a mindset, absolutely not. When it is okay is that you're building a nice profitable business, you're growing it and then say I want to take a backseat, then it's okay. But if you're saying it, I want to run it into a loss, I don't care about anything, I'll get a valuation after 10 years and leave, that is wrong. Absolutely wrong. And I don't even think I need to justify it. It's wrong.
Does your location matter? Like, not location in terms of where you're operating, location where your headquarters is or where you hail from?
No.
And one more thing I would like to bring out here. हिंदी में एक सेंटेंस है, कलकत्ता को जितना पनपना था पनप गया है, मुंबई भी काफी हद तक अब पनप गया है. That's why people think, no, we can't build in Mumbai, it's overdeveloped. Kolkata is this. We'll go to Bangalore, we'll go to Gurgaon.
Right.
I am from Hubli, I think I can sit in Hubli also and build.
Of course, you can. In fact, Ishan, I would like to put this out here and say this, that the scope for growth in tier 2 cities, non-metro cities, rural India is phenomenal and much higher than the metro cities out there. That is number one. Secondly, even if you were to sell in the metro cities, you can very well do it, sitting in a place where you're comfortable at. Just that if you know that your market is, let's say, only in Mumbai, it becomes easier to operate a headquarter from Mumbai, right? But now if you're looking at building a product which is going to scale to beyond the place where you're operating out of, then of course you can exercise the leeway of operating from any place that you want. And of course you also need to keep a tab on cost. You've seen Zepto move from Mumbai to Bangalore, you've seen Snapit move from Mumbai to Bangalore. So you need to keep a tab on cost as well.
Something I can tell about him is he's not just a great investor, not just a great businessman, but the best teacher I've ever met.
Thank you so much, Ishan.
Trust me, because I haven't seen anybody put in so much of efforts. Once we were discussing about the cap sector. So he came up with his own game, Capopoli.
Yes.
You'll not find that anywhere on the internet. Advice to a 16-year-old Siddhant or a 15-year-old Siddhant, to the whole of hungry India trying to build startups or anything. And what is teaching actually?
So advice is simple, that just be you and go with the flow. Right, take a practical perspective towards things, and there are a lot more resources that are available to the people, the 16-year-olds right now as compared to when I was a 16-year-old. I'm not too old, as I keep saying, but right now with a lot of AI-enabled tools coming in, the internet search undergoing a massive revolution with different browsers coming in. Just the tools that disposable are also making you lazy, on one side. At the same time, they're also making you more efficient, in terms of now saying that a lot of time that you earlier spent on doing a lot of tasks is now automated, so that you can spend time on more productive things. Right? So to make that time that is freed up more productive, and do what you like doing, right? And when I say like doing, take a practical perspective. As I said, you say you want to be a cricketer in India, take a practical perspective. Is it really realistic? I'm not saying don't dream, but just see if you can take a practical perspective to things and take a call on that, and then go with the flow, right? Keep doing, keep working hard. That's extremely important, irrespective of technology. That doesn't change. And be sincere at whatever you're doing, right? And the final thing, be humble.
Thank you. Thank you so much for coming on our podcast.
Thank you, my pleasure.
Thank you.